to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
We're seeing Kospi, we're seeing Nikkei, all of them trading with cuts.
Between 0.5% to about 2% or so, but very feeble recoveries in that sense.
There's a good chance that we see a recovery from the lows of the day.
Nothing changes for the bank brokers who are taking these bank guarantees for the client trades.
However, the net profit has declined by roughly 14%.
The mid-cap index down about 0.5%. The small-cap index will come up as well.
6 to 7 year long cycle. Interestingly, that point of time also, my IT names were trading at a PE of around 14 to 15.
This approval is our first NSE NDA approval in the dermatology space.
So Fractal is opened up at about 865. So I think it's opened at a slight discount to what they sold at the IPO at.
The mid-cap index is flitting between red and green. Moments ago was marginally in the green right now.
This is going to be the CNBC-TV18 destination for all things hot and happening from the India AI Impact Summit.
The January WPI data is not going to, it's not very market moving in terms of a statistic.
If we look at the medium term, are we generally excited about what the market looks like, what the opportunity looks like, what the potential is for our brands?
The mid caps, though, they're underperforming today. But other than that, it has been decent for the benchmark, barring few of the sectors which are in the red.
It is not a bad-looking screen at all. It's 100 points in the Nifty, 25,600 nearly after what was a shaky start right at the word go. This is Closing Bell. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Rima. Guys, afternoon.
Hi, afternoon. But it's a bit disappointing for the IT names. I think the Nifty IT index is still in the red, declining for the fourth consecutive day. Heavyweights like Infosys under pressure.
Rima, get your act together. What's going on? Markets at days high and this IT index is dragging us down. If it wasn't for IT stocks, we would have been at a fresh all-time high. Rima, what's going on?
Well, it's the AI disruption.
So serious,
maybe it'll come.
You will be the one that will lead us from here on.
I think I read some headlines saying that Vinod Khosla has made some comments.
Yeah, he said that.
And at least it's there's something or the other nowadays which trends on social.
Yeah.
There was that Michael Schumer article which was trending 10 days back.
Correct.
Then over the weekend there was a SAS, in defense of SAS, which was trending. And I think Vinod Khosla is talking about,
AI may completely replace IT BPO firms, disrupt white-collar jobs. That's the headline coming in from Vinod Khosla.
I think that's not helping.
Not good, not great.
Right? Because it's in that, the sentiment is quite fragile and no one knows to what extent it'll be disrupted, when, etc. So it's a bit of stay away because you don't know kind of sentiment. Or if you want to sort of, put it more sharply, shoot first, ask questions later. So, tough to get buyers into that space. There is the other side as well, and people who kind of very strongly believe that if anything, the demand for software will explode because if all that is happening, complex work will explode. Even stock analysts, for example, like Ravi Menon, we had from Macquarie earlier today, was saying that these are very attractive levels to start to buy. But, you got to actually do it. And for now, I think there is a fair bit of, in that sense, cognitive dissonance between, all that you're hearing and, of course, the stocks which have already fallen quite a bit. Persistent, Coforge are higher, but I think large cap IT is under pressure. Rima.
There was another interesting view that I heard. That remember there was this whole shift from on-prem to cloud?
Yeah.
Because it just made sense. Your operating costs come down. You start just paying a rental. Now, when you're using so many agents, which are made by other companies, does it make sense for you to go back to on-prem? Because you don't want that LLM, which owns the agent ultimately, in a way stealing your data. So therefore, does it make sense to now once again make that shift back to on-prem so that when you use the products, at least the data is saved on yours and there is no leakage or stealth.
On-prem is on-premise.
On-premise, sorry. On-prem is, on-premise. So that's, the other debate that's going on in the technical world. But I like what Rajiv Batra said of JP Morgan, right? When you don't know what the growth rate is going to be, is it going to be 4%, 2%, 0%? Then how do you assign valuations? But that debate is ongoing for now. it's still a bit subdued for the IT names. Let's tell you what we've lined up on the show today on Closing Bell. Market pushes past early losses. The Nifty is above 25,500 after opening below 25,450. In fact, now above 25,600. It's a 150-point gain. Defensive consumption play upbeat, while cyclicals drag. IT, auto, metals reflecting the caution. You can see muted trades on the likes of Cohan, Syngene, Blue Jet, OneSource. We'll discuss what's ailing these stocks in just a bit. Ola Electric tumbles to a fresh 52-week low. Market share shrinks, revenues half, losses mount. A deep dive on the show. But for now, let's find out some last hour trades. How should you position yourself? Mitesh Thakkar is now joining in as always. Mitesh?
So, one, the recovery is surprisingly stronger than what I thought it would be. Two, I think we are reaching that level, which would be the first test, which is one, Friday's high of around 25,630. Then there are multiple moving averages on the daily and the intraday charts converging around 25,650, 750 zone. So around these levels, if you have long, I would still want to, up and down some exposure on the index per se. Though on stock specific basis, there are still, stocks which are giving breakouts and doing well. SBI, for example, it's making a fresh high. The banking names haven't turned weak, and I think that's what kind of saved the Nifty in this entire decline when the IT and the rest of the pack was slightly correcting. Having said that, the stock calls that I have is one buy and one sell. On the buying side is Tata Power with a stop at 375 for targets of 395. And on the selling side is HUL on a mild pullback around 23.22 to about 23.25. Sell with a stop at 23.52 for targets of 22.75.
Yeah, no, absolutely. Thanks very much, Mitesh, for that. Appreciate it, as always. Now, just the big story today, of course, has been this RBI rules with regards to, brokers and banking exposure to capital market intermediaries like brokers. Basically, what we understand is that for proprietary trading, this is going to be a big hit. You'll have to bring in a lot more collateral, and within the collateral which you've got to bring in, you've got to put up a fair bit of cash as well. Otherwise, we've spoken to a bunch of voices like Dheeraj Rally of HDFC and others as well, and they believe that it's not going to make all that big of a difference for their business straight away. Second order is another matter, because prop makes up about 40% of F&O volumes. And, somebody like Dheeraj told us that he expects a 15 to 20% impact on F&O volumes once these rules go into effect. So if F&O volumes are low by 15-20%, I mean, everything, it shows up everywhere. Exchanges, of course, you can see what's happening with BSE, but I think it'll show up in with other broking names, etc. So why don't we just quickly play out these sound bites of Dheeraj Rally and what he had to say.
And let me just remind all of you that prop brokers constitutes about 40% of the F&O volume, and more so in the option space. So that's where we see some kind of a setback. Large brokers will have a very small exposure into the prop, and they are not, using significant bank guarantees for the prop business. On a ballpark estimate, I think 15 to 20% impact will be there on a volume effective April 1st, 2026. For most of the other brokerage houses, the impact will be negligible here.
Mitesh, in this pack, I mean, if you have a view, say, on BSE.
Well, Prashant, BSE is a stock which I have in my portfolio, so disclaimer, there is vested interest. In fact, BSE made a fresh swing high on Thursday, I think, fresh all-time highs as well. And I was looking at a target of around 3,700 over there on a medium-term basis. The first target was 3,250, which was nearly met. And it's kind of, negated the breakout by going below 3,000 levels. So for the time being, I think the stock is back into a broader range of about 2,580, roughly about 3,000, 3,050.
Mitesh, the Nifty IT index is still about 5.5% away from the all-time low levels. Do you see it headed there?
The Nifty IT index, I think I had the two targets over there. One of them was, in fact, both the targets were met last week, but the chart was still, on the negative side. So if you look at the historical chart of Nifty IT, It's got multiple lows and support around these levels of 32,400 to about 32,200. There is a weekly closing which happened on the 11th of April 25, then on 31st of May 24, in the zone of 32,200, 32,400, and I think it's just taking support over there. Not to mention it is extremely oversold. So it could give a bounce back, but my belief is that the overall larger picture, still remains on the negative side. Anything close to about 33,500, 600 should be used to exit into IT stocks, and eventually I expect the Nifty IT to head towards sub 31,000 levels.
Yeah. Have you ever, Mitesh, looked at a name like Shakti Pumps? I mean, oh boy, I mean, the absolute frenzy sometime same time last year went up to about 1,400 was the high. Stocks are about under 600 rupees now. Mitesh?
Shakti Pumps is something which I haven't tracked regularly, but I can give an immediate view. I think, it's had a gap down opening, and the last swing low which it made on the 10th of December was closing of 551, and we got a low of 552 today. So around these levels, there's the pivot support, that earlier low was being made over here. But the structure isn't encouraging. It's extremely oversold as yet. I think if it breaks 550, expect some more correction, or in a pullback, try to exit around 600.
Okay, that's Shakti Pumps. Let's talk about CDMO companies. They're under pressure. Ekta joins in with more on what could be plaguing these stocks. Ekta.
Well, yes, it's a tough day. In fact, a tough year for CDMO companies. A lot of them have corrected around 30% this year itself. And if you look at a couple of them, Cohance Life, for example, is down 75% from its 52-week high. OneSource Specialty, Syngene, Bluejet, all of them have corrected over 45%. Now, why exactly have these stocks corrected so much, and why are they trading closer to their 52-week lows? One is it was a weak Q3 that they've put behind. They have been showing choppy numbers in the past couple of quarters, but Q3 was, it was data which we just have in terms of what they reported. So Syngene revenue was down 3%, EBITDA was down 26%. Cohance revenue was down 19.5%, EBITDA was down 59%. OneSource revenue was down 26%, EBITDA was down 88%. And Bluejet revenue was down 39%, EBITDA was down around 62%. Companies have cut guidance as well. So Cohance reduced the FY26 outlook to early to mid double-digit decline versus earlier flat outlook that they had. Syngene FY26 revenue is reduced to negative 2 to 3% versus a mid-single-digit growth earlier. Now, the key factors weighing is that a lot of these CDMO companies show lumpy quarters, but you have to look at them on an annual basis. However, guidance has been cut on an FY26 basis. But the reason for that, many of the companies do say, is because of inventory destocking in their key products. So they had a really good quarter that or a year that they came out of. They had a lot of inventory which they had stocked in terms of supplies, but now they are seeing inventory destocking taking place in FY26. Biosecure Act, it's a diluted version of the earlier act, and hence the street is a little skeptical in terms of opportunities. Hence, these near-term growth concerns are emerging for companies. Also, it's a gradual move towards China +1. It's not an immediate move that these companies are looking at. Individual factors as well. Cohance, Advent sold around 9% stake in the company in September 2025. They've also received a warning letter for one of their facilities. OneSource was particularly impacted because of semaglutide delay in Canada. And Syngene's, the numbers were impacted because of a commercial product from company, one of their largest products, which did see some amount of a slowdown. So individual reasons as well, but the larger reason is inventory destocking. Tough year for most of these CDMOs.
Thank you, Ekta, for that. Once again, we should pull up that plate about how much the stocks have fallen from their record high levels of 52-week highs. Cohance, 75%. For OneSource Specialty, 47%. There you have it. And for Bluejet and Syngene, it's a fall of about 60 and 40% respectively. Dipan, these were the darlings of the stocks. There was so much excitement, on China +1, the Biosecure Act. And now they're coming off. Would you attribute it to the lumpy nature of their business and therefore this is a buy? Or do you think the best is, it's just avoid this sector now completely?
Karima, good afternoon. Thank you for having me on your show. See, one point which has been missed over here, I think in Cohance's con call, the management said that the inquiries are 2x. So that's the key thing that, if you keep tracking the inquiries across the board, the industry, the number of inquiries has certainly gone up 2-3 times or so. And that would translate into revenues maybe 2-3 years down the line. So I'm not that, we have investments in Cohance as well as Blue Jet, but we remain invested. And eventually, I think the lumpiness of these companies, we are aware of it. At some point of time, it could have fantastic numbers also, maybe 2-3 quarters down the line, once this particular inventory problem is resolved and new molecules go on stream. End of the day, there is a lot of funding coming to these the bio companies over there in USA and elsewhere, and the entire R&D spending is shifting towards such outsourced business models. So very positive on these companies, and it's just here to stay invested through this turbulent times.
Okay, all right, got that, Deepan. Let's speak about Ola Electric. That one's down 5% after reporting its numbers. Sudarshan breaks it down for us. Sudarshan?
So Ola Electric stock has slipped to 52-week low, and it's on the back of the weak set of numbers that company has reported for Q3 FY26. Revenue has halved and losses remain elevated. And if you talk about the loss for Q3 FY26, it has come at 490 crore versus loss of 560 crore. And its loss is more than the revenue that company has reported. Revenue is down 55% YOY and down 32% on a sequential basis. EBITDA loss has narrowed YOY but increased sequentially here also, and it has come at 271 crore. One silver lining in the earnings is the gross margin, where the company has seen an improvement. It has come at 34.3% versus 18.6% in the same quarter last year, and versus 30.9% on a sequential basis. So why there is a big fall in the revenue? It's on the back of sharp drop in the volume that company has seen. YOY volumes are down by almost 61%, and on a sequential basis, it's down 38%. Because of that, company's market share amongst all the electric two-wheeler players has seen a further fall. In the month of January 2026, market share has fallen to less than 6%, and it's versus almost 25% market share company used to hold in January of 2025. What about the other details? If you talk about the shareholding, there is one interesting pattern that we have seen. As of March 2025, mutual funds holding used to be around 2.5 to 2.6%. They have increased the stake as of September. From September, they continue to hold stake more than 5%. So as of March, 2.6%, and now mutual funds holding is 5.5%. Another interesting is employee costs have seen a sharp increase. On a sequential basis, it has almost doubled to 92 crore from 55 crore. After the earnings, what are brokerage views? Now, highest target price is rupees 55 per share, lowest target price is rupees 20 per share. So, brokers believe if you go by the lowest target price, they see further fall in the range of 25 to 30%.
Okay, all right. Thanks a lot for that, Sud. Deepan, you're a four-wheeler guy. You like the luxury cars. Two-wheelers, I'm not sure how much you like it, but I don't know an EV whether you like it. Ola Electric, a stock that was a 100 rupees stock, come down to around 30 rupees. I'll tell you what, in the last few months itself, it had a run till 75 rupees. These numbers are disappointing. Do you think the worst is in the price, or do you just want to stay away from this?
No, Nigel. I think the problem over here now is that the EV adoption is slower, far slower than what the street is expecting, and much below the expectations when Ola Electric went public as well. It was about 6% 3 years ago, and right now it's about 7% or so. So I think a lot of the government encouragement for EV two-wheelers, that has been reduced, and that's impacting the sales over here. And on the whole, also the competition in the EV two-wheeler segment has increased, where existing players, be it Bajaj, TVS, Hero MotoCorp, they also have upped their game and giving Ola Electric a tough competition. So a culmination of so many negative factors is resulted in this kind of a performance. And I don't see how it can change also. Means you don't see even the green shoots that the percentage of EV sales in two-wheeler can go to 10%, 12%, 15% without very strong government encouragement. And that's not happening because of budgetary constraints or whatever. So I'll remain away from this space, especially two-wheeler EVs, Ola Electric included. We have so many choices in the auto industry. All the two-wheelers are doing well, the four-wheelers are doing well, commercial vehicles are doing well, tractors are doing well. So might as well focus on the performing segments within the automobile space. than the EV, two-wheeler EV segment, where there is growth. It's growing higher than the industry, but these kind of growth rates are just not sustainable for someone like Ola Electric.
What about EIL? Is this a company that you've tracked? 2 days, Friday and today, stock has hit 10% upper circuit.
Can you give the full form of
Engineers India Limited, EIL. Engineers India Limited came out with number.
EIL, okay. Of course, EIL has been a very old listing, and although we don't track it, I'm aware of this company, and I think super set of numbers coming through for December quarter. That is what is driving the earnings over there, and we are seeing a lot of investment coming into not only in India but also in rest of the world in a lot of the oil and chemical, oil petrochemical industry. And that's benefiting Engineers India. Its order book position is surging. A lot of it is coming from overseas as well, and valuations are reasonable. So I'm not all surprised with this kind of a run-up which we are seeing. Okay, it may cool off in the next 2-3 days or so, but certainly a very interesting company to go deeper into, track, and maybe invest in.
Indeed, the order book hit an all-time high of 15,670. And then, as you spoke about their overseas expansion, the Africa's biggest refinery, Dangote, it was a 3,000 crore plus order, so the company won that. And that was, of course, a big trigger. And as you said, they're expanding beyond the traditional oil and gas space into green hydrogen, biorefineries, coal gasification. So EIL, Engineers India Limited, has been on a tear. Fractal Analytics had a very subdued, tepid kind of a listing. Let's just pull that stock up. The issue price was 900. The opening level, the stock was down 2-3%. Fractal Analytics, the recently listed, today's listing, will come up for you. Dipan, at what point does Fractal start looking attractive? And do you think this is a company which gets disrupted, or will it be the disruptor?
Rima, I'll take a pass on this one. I did not track Fractal Analytics so closely, but certainly it's an interesting business model. But we need to understand it better before I can give a comment.
Okay, all right. Thanks a lot, Deepan, for joining in, giving us a view on the stocks that we did discuss. Enjoy the remainder of the day. Well, I'll tell you what, before we slip into a short break, just pull up the intraday chart of the tech index. That's seen a good recovery actually from the lows of the day. Infosys is the one that's cut its losses. I recall it being down close to around 2%, but Infosys now is down close to around 1%, and it's recovered a goodish bit. Rima, just take a look at that.
Indeed.
We egged you on, and just take a look at that. So that's participated actually. The reason that the Nifty is now at the high point of the day with a gain of around 180 points is because Reliance Industries, the big boy, has found its form. That's getting counted. And the tech index, that was as it is underperforming, that seems to be finding its form as well, currently moving to the high point of the day, both Reliance Industries as well as the tech, giving the Nifty bank that's been in top form from the word go. Slip into a short break, come back. On the other side, Varun Goel is waiting for us. He'll give us his insight into how the market is set up.
Welcome back. Recovery is underway. Now it's 25,650 on the Nifty as we inch towards a 200-point gain led by IT. But what about other stocks? We've had so many earnings reaction playing out and individual news flow. Ria is now to join us in with the details. Ria.
Well, yes, a lot of stocks buzzing in trade today. Let's start off with GMR Airports. This one is up roughly 7% in trade today. Revenue has gone up by 51%. Even the EBITDA has gone up by 71% on a year-on-year basis. And in the month of January, the passenger traffic has gone up by around 3.9% compared to the previous year. Brokerages also remain optimistic on the stock despite muted passenger traffic. Both Jefferies and Citi have maintained their buy call on this stock. There's also Torrent Pharma reporting its Q3 numbers. The stock is also up roughly 4% in trade today. The net profit and revenue have gone up by around 26% and 18% on a year-on-year basis. On the there's also K-Fintech. Net profit has gone up by around 2% on a year-on-year basis. Revenue has also seen an increase of around 28% compared to the previous year. On the flip side, Inox Wind has reported a weak set of numbers, down around 4% in trade today. The company has missed estimates on all fronts, and analysts have also cut their earnings forecasts ahead for the company. Revenue has gone up by around 32% 2% for the company, but this was below what analysts were expecting. IRB Infra has also reported quite a weak set of numbers, with the revenue going down by around 8% on a year-on-year basis. Some other stocks are also in focus today. Natco Pharma is up around 8% after receiving an approval from the Central Drug Standard Control Organization for semaglutide in India. And Cartrade has also been in focus today, up around 6% after announcing its multi-agent AI ecosystem, which is set to be rolled out across its platforms over the coming few months.
Okay. All right. Cartrade up 6. And I mean, this year, of course, has been tough for Cartrade, despite the 6% pop. I think still down about 26%. Varun Goyal is with us, Senior Fund Manager at Mirai Asset Mutual Fund. Varun, good to have you with us here. Good afternoon. Now, by the way, do you have exposure to the IT names, Varun, in the fund?
Yeah, good afternoon, Prashant. Of course, we do have exposure to IT space in our funds, yes.
Okay. And have you done anything with it over the last 10 days, as these stocks have taken a real beating?
I think market is, of course, worried about the terminal growth and the terminal values of most of these companies. I think in the short term, the fear may be getting overdone. Of course, a lot of these businesses will have to go structural change and renovation. I think there'll be winners and losers. So it's very early days. It's very, very difficult, Prashant, to take a very definitive call as to how things will play out. We are also trying to understand the implications of a very fast-changing technology. I think the whole world is trying to get its handle on it. So as of now, we are not doing any change as such. We continue to hold what we own, and of course, trying to figure out how this change will exactly play out. I think there's a lot of price damage which has happened. Things may not actually be as bad as being feared, but of course, we don't know how the eventual game will be.
You know, if you were running like you did the AIF at one point, and you were sort of more getting in and out, are there tactical trades here now, Varun?
Again, Prashant, very, very difficult to say. With every day there is a new announcement, there is a new newsletter, there is a new model or a product being launched. I think there is a lot of uncertainty. While I think there might be value, but market, of course, abhors any kind of uncertainty. And therefore, till the time people have figured out how exactly this will play out, I think this kind of volatility may continue. And of course, there will be great opportunities for wealth creation. And of course, there will be losers also in this whole change. But I think very early days to be very definitive about how things will play out.
Hi, Varun. Good to see you in. Our last chat, you were mentioning, it's a good time to increase allocation to equities. I think that's worked pretty well, because last 20 days or so, the headline index might have not moved too much, but there is signs that, the mid and the small caps are coming back to life. Though I still think, the first couple of weeks of March, as we see normally because of the year-end phenomena, there could be some pressure creeping back into the broader markets. But that's normally, a seasonality thing that plays out. Getting back to the sector that I want to discuss, defense. I recall we chatting that we're looking forward to higher allocation in the budget. It seems that there was one space that actually the allocation was as good as what was expected was defense. No worries, right, on that front. The stocks have corrected a goodish bit from the top. Your view on that sector?
Yeah, I think, Nigel, broadly, if you look at the results, not just in defense sector, but across sectors, if you look at Nifty 500 as a larger universe, the results, if you adjust for the labor code change, has been pretty robust. I think good double-digit kind of earnings growth. After a long time, we are seeing signs of revival across the board. Be it banking, finance, infrastructure, capex-related stories, consumption stories. And I think this recovery will only strengthen in the next few quarters. And that is why, that explains our bullish view on the Indian equity markets. The risk appear to be coming more from outside. Specifically about defense, I think that's a sector which will have a lot of tailwinds for growth in the next 3 to 5 years. Not just we have a large domestic requirement, but a lot of avenues for export also. So we believe that the tier one PSU defense company should continue to do well. There are a lot of companies in the private sector which will get added to the overall universe. And I think we will see a lot more listings in the next 6 to 12 months. And overall, the space looks quite attractive from an earnings point of view.
Yeah. The other space, of course, I mean, there's always something new every day nowadays, right? There's the brokers and the exchange BSE. Again, exposure here, Varun?
Yeah, so I think from a 5-year point of view, there's a great opportunity for wealth creation. The financialization of savings as a theme is very strong. Of course, in the short term, Will there be some impact because of the change in regulations? Yes, there would be. I think to that extent, we might have to see some lower volumes. And I think this is something that the government has been trying to do, our government and the regulator have been trying to do in the last 1 year, curb excessive volatility. But I think broadly, the trend is fairly positive. And as such, various market participants, be it exchanges, depositories, brokers, I think they should have a fairly robust growth from the next 3 to 5 years.
I see. And you own these in your portfolio?
Yeah, we would. I think we would have presence across most of these.
I think BSE has recovered quite sharply from the lows, about 1,000 rupees, I think. Well, let me just put this up. Not 1,000 rupees, beg your pardon. It's come up 27, 26, $100 from the lows. MCX is the other one, which I think recovered quite sharply from the lows as well. Right at the word go. 21.89 was the low, and stocks at about 23.25. So both have come up. I mean, in terms of brokers, look at Angel, etc. Angel is down 4, which means it's up about 4% from the lows as well. MK, maybe you could look at Motilal Financial Services, sideways, but all of them off quite a bit from where they were trading early on in that sense. So that's the picture. 1,800 stocks are lower, and you got about 1,300 stocks which are higher as we stand right now. Power Grid, of course, is having a very, very good move. Power Grid was, what, $250 10 days back. It's at 300 now. So that's a very sharp move. And of course, I mean, there was numbers and there was the upgrade in terms of the guidance, etc., which we had highlighted. And I think that triggered the entire move. But that's a very, very smart move. GMR Airport is having a very good day. Again, numbers was very strong. It's up about 7% as things stand. Yeah, I mean, there's no, a shortage of names going up on decent-sized volumes at this stage. Anything in real estate, Varun, on your radar? Again, a sector which was the top underperformer last year. This year, of course, has gotten hit badly again.
I think the sector is clearly undervalued. I think we have seen a very significant monetary easing, because of which the mortgage rates have come down quite significantly. I think last year, mortgage rates were running at 8.5. Today, you're getting mortgages at 7.2. So there is a very significant saving. I think the stock prices have also corrected very significantly, and therefore, we believe the sector is quite attractive. I think it may take it time, but I think 7-8% kind of volume growth, 7-8% pricing growth looks quite attractive. The balance sheets are completely ungeared. So I think the Tier 1 real estate space looks quite interesting.
Varun, the sense I'm getting from you is you're constructive on a fair bit of things, but nothing's going to happen quickly here, right? You got to give it time. So you got to be slightly long-termish across spaces.
So Prashant, if you look at it, the broader markets, we had Nifty delivering 3% earning growth in FY25. I think this year we hopefully end with it 7 to 8%. I think FY27 will be the first year, after 2 years of slowdown, that we will see a double-digit earnings growth. And the bigger story will play out, of course, in the small and the mid-cap segment, where from a negative 5 to 10% earnings growth, we will move to, let's say, a 10 to 15% positive growth. So I think economy is clearly on the mend. We had a cyclical slowdown in the economy, which is now turning positive. So we are very positive on cyclical sectors in Indian economy, be it banking, be it capex-heavy sectors, be it auto, discretionary consumption. I think, of course, the risks are coming more from the export sectors, and hopefully with the US deal and the Europe deal in the next 12 months, outlook should also change on that side. So broadly, we believe Indian economy is clearly on an uptrend, on a cyclical uptick, and as such, earnings should definitely get better.
Okay, Varun, thanks very much for that. We'll leave it there. Appreciate your time here on CNBC-TV18. Nigel has walked across to the wall with a sense on what's happening on the FRO side. Nigel, take it away.
Well, the Nifty is at the high point of the day, up close to 200 points. And early this morning when we came in, and the GIFT Nifty was suggesting a 100-point gap down, we were saying that maybe, in fact, there's a probability we recover from the day's low. No howler coming in overnight. The PCR had moved to the lower end of the range at around 0.6 or thereabouts. Now, what's interesting today is the VIX hasn't really cooled off big time, though the Nifty has moved up. So that's a bit of a rarity. Normally, the VIX would have been sharply lower. But that's a crucial point that we're looking at. The PCR has now moved to around 1.05. At the start of today, it was 0.64. And that was the key technical level that, in fact, the bulls would have been latching onto, that was in a bit of an oversold zone. Now, the reason the PCR has moved back up is because there's put writing that's come back into play. If you look at the premium on the 25,500 put, it's moved to around 34 bucks from around 112 bucks. So that's down by a third. Even if you look at the 25,600 put out there as well, the premium has come down drastically. It's come down to around 50 rupees. At the start of today, it was 168 rupees. So the writers, they are back. They believe at lower levels. The 200 DMA is going to get defended, which is ballpark around 25,250 or thereabouts. Individual stocks that are calling for attention. GMR is seeing a good amount of buying in the cash market. Delivery is quite high, and there's about a short covering that's taking place. KFIN, that's a stock that's not very, very active in the F&O market. But in today's trading session, that as well has come in for a bit of a bounce. 5% open interest down. The stock is up close to around 4%. But there is some signs of shorting on the Inox Wind stock because the shorts out there are jumping in there. Just one quick word with regard to the tech index. The way it's recovered from the day's low, and even in Friday's trading session, it recovered considerably from the day's low. If the recent low can get protected, then a lot of shorts on individual counters. So we'll have to keep an eye out on that because the low it made on Friday was around 31,400 odd. From there, it's seen a big bounce. So I think we'll have to keep an eye out on this because there is a lot of shorting on all of these names. Back to you guys.
Thank you very much for that. There's one more stock, InfoEdge, which is indexed in a way to IT, particularly hiring for the technology companies. Naukri, which is about, I think, 75 or 80% of InfoEdge's value comes in from Naukri. And Naukri in particular, caters to these IT companies. So if IT hiring comes down on account of AI, then InfoEdge also gets impacted. And you can see that in the stock price because along with the IT index, InfoEdge has slipped nearly 15% from the start of the year. And FirstSource, Brainbees Solution, that's the name of the company, that's tanked 10%. It's a fresh low. Stock is plummeting. Q3 losses have widened to 39 crore, while the top line has grown by 12%. The margins have declined, and now the stock is 45% below its IPO price. And the other one is Inox Wind. Disappointing set of numbers, and brokerages have also scaled down the kind of execution the company is going to do in FY26 and FY27. So Inox Wind is another one where you can see a 4.5% fall. Get into a break. On the other side, we'll get you a few BTST calls from our technical experts. Stay tuned.
Smashing it out of the park as we speak. The Nifty Bank now up close to around 800 points. Big move is what we're seeing on that one. And SBI, that's been in fine form. The dips are getting bought into that stock. Came out with a super set of numbers. And from there, it's not really looked back. So good up move is what we're seeing. SBI now at the high point of the day. And the tech index as well, doing very, very well as we speak. Mitesh is back with us. Mitesh, what do? Take money off the table or ride your gains and trail your stop loss for someone who's taking a position on the Nifty?
Yeah, actually, surprised that the Nifty has shown so much of strength. But trail your stop losses now, I think 25, 6, 30, 40 is the support zone. We are only about 50 points higher from there. So keeping the fact that we can actually hit 25, 750, and if we cross that, we'll gain more strength. I think on balance, I think it might be good to trail the stop to about 25, 630. Having said that, on the stock side, I have L&T as a BTST with a stop at about 41.80 for targets of 42.30. And JSW Energy as well. That's a BTST with a stop at 487 for targets of 499.
L&T and JSW Energy. Anything on Power Grid? Big move today, large volumes?
I like that stock a lot. In fact, both Power Grid and NTPC, I think, on the medium to long-term charts have particularly improved. Power Grid, I think, in this up leg could head towards 315 to begin with, and the highest monthly closing for the stock is about 330. That also looks fairly gettable to me. So, extremely positive on Power Grid with these two targets.
IT index, of course, has recovered nearly 1.5% from the day's low. It's now back in the green, but AI's impact on Indian IT companies is still unclear. Now, many believe that perhaps there is some more downside to go. We do not know what the ultimate growth rate is going to be, how fast the impact of the disruption on the IT business. So therefore, when you don't know that, how can you assign an appropriate valuation multiple? But there are analysts who believe that perhaps we're now reaching attractive levels and it's time to aggressively buy. So listen in to the comments that we got earlier on the show, Ravi Menon of Macquarie and JPM's Rajiv Batra.
Today, despite correction, they are trading at 19p. This year, I'm talking about MSCI India IT sector. And top of it, the hope of earning growth, which you were highlighting, are still very high, saying that 2026 calendar year earning growth will be 11%, 2027 will be 8.5. But the proof lies in the final answer. We have just seen one quarter result gone through. MSCI India IT earning growth was only 2%. Now at a 19.5p, you give me 2% earning growth. PEG ratio is not at all sustainable for me. So rather than worrying about a valuation, we need to think about growth. And in case if looking at, okay, the valuations are 10-year average, and we are trying to entice investor on that side, we are just simply bringing them into a valuation trap.
We actually think that there will be a significant PE re-rating when the guidance comes out in April. So we think that this year demand's actually looking a little bit better. And when people realize that fears of disruption are overdone, I think that people have conflated the low demand in the last couple of years along with and confused that with the impact from AI. I think that's just a macro issue, a lot of uncertainty. And when there is a lot of technology change, people have also been reluctant to invest because they're worried that what they invest in will actually be made redundant by the time that investment is finished.
Well, that is a bull versus bear argument coming in on Indian IT. Ambrish Baliga is also joining us in the last leg of the show. Ambrish, first, share your thoughts on Indian IT and any stock which looks attractive at current level.
Hi, Rima. Regarding IT, I believe, yes, this is a disruption which is going to happen. And we need to look at the fleet-footed companies which can possibly change their business model and utilize whatever is happening to their advantage. And that's very much possible because, we have seen that in the past also, that companies have transformed themselves. But the question is how fast they do it and, how well and how effective they are. And out here, it in fact could be some of the mid-cap IT companies which could be in the right position to utilize AI as compared to the large ones, where I think change could be a bit difficult. So among the smaller, among the mid-cap ones, I would surely talk about something like a Persistent, which could possibly be one of those front runners. But overall, what I would say is the sentiment is affected. But this does not mean that it's the end of the road because, we have seen such issues in the past. And if you go back to the 90s, computerization itself was, a four-letter word. And we used to have so many hartals and, shutdowns because of that. And just see, over the next 3 decades, the amount of wealth, this has created, the amount of employment it has created, I think it's there for everyone to know. So AI also would be a similar animal going ahead.
Okay, all right. Hi, Ambrish, but I believe you're impressed with Dabur's Chyawanprash. What's the rationale out there?
In fact, it's across all sub-brands of Dabur, just not Chyawanprash.
Oh.
Again, it's one of the best-known brands in healthcare, home and personal care, as well as food and beverages. It's among the top 4 FMCG names in India. Total distribution of about 85 lakh retail outlets. More than 50% of India-specific revenue comes from semi-urban and rural areas. And 26% of the consolidated top line is from international markets, which again has been growing at about 11% Y-on-Y. If you look at the Q3 numbers, they were decent. I wouldn't say they were excellent, but they're decent. Both volume and revenue growth we saw. Home and personal care grew by about 10% plus, especially hair oil and oral care. Badshah Masala brand, which they had bought in 2023, that's growing at high single digits. Overall margins for the company has gone up by about 30 bips. So the next 4 to 6 quarters, we should see early double-digit growth. Rural demand also is showing traction, which is a major positive. So expecting an EPS of about 14 for FY28 with a target price of about 630.
Wow, this Dabur. for you. So, fair enough. So, in the IT name, just to close that, what is the name you like best, Amrish?
Persistent is one
Persistent.
of them. We are looking at others also. I think over the next week, 10 days.
Do you think it makes sense to buy like a IT ETF or something, and that's a better way to do it, or not really?
It could be because IT ETFs is a mix of the large caps, which again, like I said, could be the slow movers in this, whereas it should be more mid cap heavy.
Should be more mid cap heavy.
Have you done any analysis on a company called Orion Pro? You know, when we were chatting with a market guest earlier, he said Orion Pro is a stock in the mid-cap space that he likes. It caters to data center. 16-17%, I think, of the revenue comes in from data center or the order book. Have you done any analysis on this?
No, I've not really looked at Orion Pro for a very, very long time. So it's difficult for me to really recommend that at this point in time.
Okay, and from the capital marketplace, what do you like? You know, we're waiting for NSE's listing. You have BSE that periodically pulls back. There's so much of interest, you know, every dip gets bought into. I think, if I'm not mistaken, 4 months ago, the stock was at 2,200 rupees. And today it's at around 2,800 rupees after seeing a big correction from the recent top. What's your view on this name? And from these capital marketplace, what do you like?
Like BSE is more known for like the cash market transactions as compared to F&O, whereas NSE is more for the F&O side of the market. And whatever we have seen in the recent past, like from the government's point of view, we have seen in the budget, now the RBI latest regulations which have come out, clearly is trying to reduce the F&O volumes in the market. So it would be negative NSE, and in the same breath, you can say it's positive BSE. But then, finally, the negative sentiment hits, across. So we have seen this correction in BSE. But I think at lower levels could be bought. The way I also see the latest regulation which has come out is, yes, I think it's overall negative for the volumes in the market. Like I said, from the F&O side, if you're talking of the prop volumes which were there, I think that will reduce. But then most of the large, listed entities are more on the client side than the prop book. Whereas you have a lot of mid-sized mom and pop shops which are more into the prop book. I think they are the ones which will suffer more, not the ones which are listed. But since the sentiment is affected, I think that's a good buying opportunity at lower levels. We've already seen a 6 to 7% correction in most of the stocks. I think we could see either 4 or 5% more, but then that should be an opportunity to buy at lower levels.
Okay. All right. Got that. Amrish, liking BSE, a good opportunity to add on to positions. We have a lot more questions for you, Amrish. We'll slip into a short break, come back, we'll continue market talk, and we'll also close the markets just around 9 minutes to go. Welcome back. Markets doing well, 200-point gain. The Nifty Bank as well doing pretty well in today's trading session. However, the number of stocks declining actually are more than the number of stocks advancing. So it's not all boom, 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 and in fact, your portfolio is just glowing. There are some stocks that are underperforming. A couple of names to point out. Muthoot Finance. Amrish, I wanted your view out here. That's another name that's seen a big, big rally. Now, this argument is like this, that Muthoot has gone to an extreme in terms of valuations, trading at more than 3 times price to book. You have a smaller peer that's got fresh parentage, new parentage that's coming in there, which is Manappuram. So some believe now you rather switch to Manappuram rather than Muthoot. What's your take? Muthoot's been the big outperformer. If I just pull up, a chart, maybe a 2-year chart or so. Your take?
No, see, I mean, the main reason both these stocks have done well is the gold prices. Because the gold prices have gone up, they've been able to expand their base and possibly lend more. But the question is, will the gold prices double from here over the next 1 year or 2 years? Or before doubling, will it correct decently well? And if you look at history, after this sort of a move, there's always a decent correction before the next move up. I mean, if you're talking of the next 10 years, yes, surely gold prices should be much higher than where they are today. But I'm talking of the next 1 or 2 years. If, the expectation is that, yes, there can be a decent correction from here, then possibly at this point of time, you should not be investing in the gold finance companies because that risk is always there of things going wrong. So at this point of time, I would say those who already have there in the portfolios, I will not say sell, because although the valuations are high, but keep a trailing stop loss. But for fresh investment, I would be a bit cautious.
Did you analyze Fractal Analytics, Ambarish? 842,
no,
yeah.
I didn't look at it very much in detail, but then I went by the overall market perception on this and didn't apply for the IPO.
First Source, have you been tracking it since the IPO? Pretty dismal. Losses are widening and the stock is halved, down 40-50% from the IPO price.
This is a stock I used to track about 10-15 years back, but recently I've not been tracking it.
What about this IPL valuation, Amrish? I'm not sure whether you're tracking that. For United Spirits, they'll suddenly get, anything between 12 to around 16,000 crores. Very, very approximately, depending on what they close out, because they have clearly said that they want to sell the franchise. And because they're looking to sell the franchise and demand could be high, the street is looking at other alternatives, namely Sun TV. The stock trades at around 2 times EV upon EBITDA. It's core business because they've got cash, they've got the IPL franchise as well. You had, the Sanjeev Goenka owned RSPG Ventures. That's the other one in there. And in the unlisted market, you have CSK. Any of these names, you like because of the IPL ownership, or would you just stay away?
See, the way I would see it is more like a holding company.
Yeah.
If you're selling, that's the time you actually extract the value. And 15,000 crores for United Spirits would in fact mean about 15% of the market cap, which is decent. So from that point of view, I would say it's positive. For the others, it is more of a holding company. So unless they sell, it will always be valued at a discount, just like the other holding companies.
Yeah, but Sun TV otherwise is giving you some cushion, right, out there. Sun TV, I think market cap 22,000 crores, IPL franchise of 10,000 crores, cash in books of 77,000 crores, approximately you're at 18,000 crores between these two. And the business does around 2,500 crores of EBITDA. So not interesting enough?
No, it's interesting, no doubt. But since you asked me from the IPL's point of view, IPL 10,000 crores of valuation will actually be considered as about 2,500 to 3,000 when you do sum of parts for Sun. So from that point of view, you really don't get that valuation unless you're selling it out.
Correct. And the intent from the promoter as well is something that you need to understand. That's Absolutely. The reason that it's getting these sort of valuations, because you don't know what's the intent of the promoter and what they want to do with regard to shareholders. A quick word on Dixon. The stock saw a sharp correction from the top, but it's gradually made its way from around the 10,500 rupees. It's on its way to around 12,000 rupees. That's the leader from the pack, right? What's your view on it?
Dixon, after this sort of a correction which we have seen, I think at the current levels, it makes a lot of sense. I'm not saying it'll go back to those levels of 18,000, but move to about 13,000, 13,500 very much is possible over the next 2 to 3 months.
Okay. All right. Cut that, Amrish. We appreciate you joining in. We've discussed quite a few stocks. Thanks a lot for joining in. Wishing you a good remainder of the day, a pleasant evening, Monday evening, not Friday. It's been quite good actually for the markets. Well, let's wind things down then. For the Nifty, we go home with gains of 210 points. What led the way in today's trading session? Well, you had Power Grid. That stock moved from strength to strength. It was up close to around 4%. Coal India, it's seen a 10% correction from the recent peak. That stock is pulled back now. It's up close to around 3.5%. The big boy, HDFC Bank, said, I'm the one in there, I'm going to do the heavy lifting. Giving it company was ITC as well as Reliance Industries. Both of them did pretty well. On the flip side, a few stocks were losing out in trade. You had Tech Mahindra that was lower, Maruti Suzuki as well was down close to 100%, and Trent was losing in trade. But otherwise, the real story was from the broader markets. GMR Airports, stock up 7.5%. Street likes its numbers. RVNL, the stock was up 5.5%. Good move out there. IRDA was up close to around 5%. KFin, we had the management sounding optimistic about the future, and that stock as well went home with solid gains. Regulators are tightening things up with regard to trading, particularly in the F&O market, and this time around the attention was on prop traders. Because of that, BSE was lower. Angel One actually doesn't get directly impacted as per what analysts suggest. So that stock earlier today was down 8%. It goes home with a cut of only around 4.5%. So some kind of bottom fishing being seen out there. Muthoot Finance from the recent peak has seen a big correction. That's down close to around 2% additionally in today's trade. Though, in fact, that's been a big outperformer. So one would attribute it to routine profit taking out there. So net, it was a good trading session for the bulls. The number of stocks advancing, though, were lower than the number of stocks declining. That was something that may not make your portfolio feel very, very good. But otherwise, EIL, Jamna Auto, Diamond Power, all of them did pretty well in trade. On the flip side, Penard Industries, Ola Electric, and Inox Wind, as well as Religare, not the outcome that the street was looking at. All of them were on the losing end. Well, on that note, though, we'll wrap up on this edition of Closing Bell. You stay tuned. Markets Forward comes up next.